So you have a system, especially in place in capitalism, where we are now in what they call boom and bust cycles. And you have every single economic expert saying another crash is going to happen. Doesn't matter how bad it is, there is another crash coming. And this op-ed piece written by Will Hutton, I think it says what could potentially happen if we see another shock to the whole, economic system like we did in 2008 with the Lehman crash. There could be huge consequences, especially when you look at the world how it is now. So, 10 years ago this weekend, frantic efforts were being made to save the biggest banks in the world. When Chancellor Alistair Darling overruled Barclays' supreme stupidity in considering the takeover of the stricken Lehman Brothers investment bank, the extent and complexity of its debts would have brought down both it and probably the British banking system. The die was cast. Lehman collapsed, and the shockwaves are still felt to this day. Suddenly, the proud buccaneers of high finance were exposed as sapient nincompoops, as the great economic commentator Walter Bellhot described senior executives of Overend and Grinley & Co. in the wake of the collapse 150 years earlier. All assumptions made by a generation of free market economists, conservative politicians and financial establishments were shown to be ideological tosh and propagated by today's nincompoops. Yes, markets could and did make vast earth-shaking mistakes. Yes, shareholders were so disengaged from the companies in which they invested, and they were in effect allowed ownerless banks to be run to create gargantuan dynastic fortunes for their managers, assuming risk on a scale that they themselves did not understand. Yes, the financial system had become a complex, interworked network, no stronger than its weakest link, which was very weak. The bill for all these mistakes would be picked up by wider society, with the perpetrators suffering nothing, nationalising losses and privatising gain. The whole effect was to transmute capitalism into a system of value extraction rather than value creation, with knock-on effects and depressed wages and contractualised work into short-term and zero-hour contracts. The financial system based in London and New York had become damnable, the nightmare of our times. The cumulative losses of this have become so large they can scarcely be comprehended. The total cost across the West of recapitalising bust banks, offering guarantees and making good disappeared liquidity is an estimated 14 trillion. The recession that followed was the deepest since the 1930s, with the slowest subsequent recovery. Worse, Conservative politicians, most successfully in Britain, succeeded in pinning the blame not on the architects and the operators of a modern finance system, but on the excesses of the state, the rationale for austerity. High government spending, alleged Chancellor George Osborne and Prime Minister David Cameron, had caused the government budget to deflate to balloon. Wrong. Rather, the deficit was caused by collapsing tax revenues and during a monumental recession. The same nincompoopry that had created modern finance now proclaimed that the stock of public debt, despite being proportionally higher for most than the previous centuries at a time of higher interest rates, represented the existential threat in the UK. The public spending head on services will have fallen by a quarter by 2020. As a result of the consequent spending cuts, tax increases could not be countenanced. What remains of Britain's social contract is ripped apart. The distresses and dissatisfaction helped fuel the anger that won the referendum for leave. As profound as the rupturing of the the Faustian bargain between finance and society that defined of about 30 years up until about 2008. The bankers had made their fortunes, but wider society was offered boundless credit with booming property prices. Companies did not have to create value, though. Value through innovation, investment and export. Instead, they could ride the credit balloon. This was the result, an overblown, feather-bedded service sector, delivering underground productivity growth. Post-2008, the wounded system had been unable to deliver at the same pace, although it tries. The illusionary of productivity has stagnated, and the trust in value in value-extracting businesses and capitalism, which continues to displace risk onto the shoulders of ordinary people, has fallen to new lows. Small wonder that Jeremy Corbyn did so well in the 2017 general election. Too little has been learned, and too little has changed. Even the limited reforms set in trance since 2010 have not been fully implemented. Worse, the essential amoral bargain remains in place. Finance can do more or less what it likes, with pay beyond the dreams for avarice for what Lord Almintier, the former chief of the Financial Service Authority, calls activity that is no better than a system of wealth transference. It's a zero sum. Nothing worthwhile is taking place. Yet, if it collapses, be sure that the government will be asked to step in again. The risks are downplayed. Surely it could not happen again when regulators are more alert and bankers have been required to provide more of their own capital as a cushion against markets. Yet, just as a cursory glance at the market shows how fibrile they are, how exposed to violent movements, how illusionary is their much vaunted liquidity. How rich are the pickings remain for those prepared to take the risks. Note also how shaky are the foundations of the new wave of financial products offering risk diversification, notably exchange trade fundings, or ETF. We live in a world where the price of the US Treasury bonds, a market of multi-trillion dollars, can move 10% in 10 minutes. What was bewildering in 2008 was how, as a result of compromised algorithmic buy and sell instructions, everybody had diversified in the same way. So everybody became simultaneously buyers and sellers. That is even more accurate today. All there is required is for, say, Turkey or Italy to default on their debts, an ETF to become distressed, or a subsequence of Chinese banks to fail, which is all too imaginable. The impact would radiate across the network as it did in 2008. Banks carry far too little capital to insulate themselves from the shocks, and governments, again, would have to step in. Capitalism as it is could not survive. Trump's America would not collaborate in underwriting a global bailout as the US did in 2008. The trend towards deglobalization and trade protection would accelerate. Brexit Britain outside the EU with a huge financial sector would be devastated. We must urgently minimize risk and reshape our economy. If not, today's debts and preoccupations will, in the future, be viewed as incredible. And this is the warning. I mean, this guy's not the only one to write stuff about this, about how our system is potentially could all just come clashing down and make the 2008 crash look like child's play. Not only mention that, but we would be on the outside of the European Union, which could make us even worse off. Because one of the things that happened in the 2008 crash was a lot of these European countries worked together. We're out of that club now. And, you know, if we are outside and another crash does happen, prepare for even greater austerity, because as it said here, look, we were one of the countries where the blame hadn't been put on the bankers who had caused the crisis. It had been blamed on the ballooning deficit caused by crazy public spending, which just wasn't the case. You have a look now where you have people, and I've said this before, you have people who are in full-time work, but because wages have been so stagnant but prices have kept on increasing, that they now have to rely on government handouts even though they're in full-time working, or they have to rely on food banks because they're in full-time work. These are some of the real crises that our country and even the world is potentially facing. And yet, what are we doing? We're talking about Brexit. Brexit does nothing to help the UK. All Brexit does is exasperate all the problems that we are facing now and just makes them worse. You know, what is it? Yeah, out of the 10 most poorest areas in the European Union, 7 of them are in the UK. That should be shocking a lot of people, because a lot of people seem to have this idea that all of Britain is really rich, and yet that statistic of 7 out of the 10 most poorest areas in the EU, 7 of them are in the UK. Where is the investment coming from the government to help these areas? There is none, absolutely none. And these towns and cities that have been really suffering since 2008, and even further back since, you go all the way back to the miners' strike, these areas have really been suffering, and successive governments have done little to nothing to help these areas. The only thing and the organisation that has helped these areas is the European Union. But, there you go.